This is assignment number 4 for BFIN 317, Financial Modeling, and today I will be forecasting the sales revenue, income statement, balance sheet, and cash flows for Archer-Daniels-Midland and Bunge. ADM was founded in 1902 as a linseed oil production company, selling this oil to other companies that used it as a product in industrial applications like paint and sealants. 5 decades later, ADM expanded in business to grain, flour, and soybeans. By the 1970s, ADM had acquired many different agricultural companies, positioning itself towards the top of the industry. In 2018, the company reached out to Bunge, a competitor in the agriculture industry, as part of an acquisition, but this deal never went through, and Bunge remains a strong competitor to ADM to this day. Bunge was founded almost a century before ADM in 1818 in Amsterdam and expanded operations in South America before the turn of the 20th century. Not too long after the founding of ADM, Bunge moved into North America, making itself a large multinational company. In the 1990s, Bunge expanded its business segments and started dealing in fertilizer, seed oils, and grains. In 2021, Bunge announced a joint venture with Chevron to develop renewable fuel with a strong commitment to lower global emissions. Moving on to the assumptions for both companies, each operate in the same industry and have operations around the globe. So the assumptions will be very similar for both. One, given their global nature, geopolitics plays a large role in how the business operates. For example, the Russian-Ukraine war is pointed to in both companies' 10Ks as having an impact on operations. I decided to take a more pessimistic approach to the forecast for this reason, given the increasing unrest in the Middle East and changes occurring amongst the political regimes in South America. This adds levels of uncertainty to the operations of both companies. Government regulations also play a major role in how business performs for agricultural companies. For this forecast, we will assume that regulations made by governing bodies help to stabilize prices and reduce volatility in the industry. The final assumption is global demand for agricultural products. While supply and demand for these products will naturally vary depending on many factors like weather or famines, we will assume that there will be no major adverse conditions that will influence the general supply and demand for goods. So looking at the revenue for ADM, I went with the past 20 years because of the overall variation seen during this period. I also applied a dummy variable to the years with a less linear trend to smooth out the regression. Looking at the graph, there are several peaks and troughs, but the overall trend is positive. I decided to follow this trend as seen in the past, and the equation given through the regression follows this trend well. There are some large swings in between several years, but for the most part, the movement is stable with relatively small movements between years. One assumption here is that regulation from global government has helped to stabilize markets over time. With this all considered, the forecasted revenues for the next 3 years is 95.6 billion, 78.8 billion, and 80.2 billion. Moving to Bunge's historical revenue, we can see similar trends as we did with ADM. Several years have large variance, but for the most part, year-over-year movements is relatively small and stable. The similarities between the two companies' revenues becomes more apparent when looking at the graphs. The movements are very close when compared each year, and therefore the forecast is going to look quite similar as well. With the regression calculated for Bunge, the forecast for the next 3 years is 65.7 billion, 51.1 billion, and 52.1 billion. So here's a quick correlation analysis that I ran on the sales revenue between the two companies. As seen, the two companies have a high correlation with one another over the past 20 years, and this is to be somewhat expected because they are operating in the same industry. Before the forecasted revenues, the two had a correlation coefficient of 0.97. After the forecast, this correlation remained close at 0.971. With this information, I felt very confident in the projections for the two companies. Moving to the historical income statement for ADM, there are very few things that stand out. Of all the line items year over year, the largest variation in line items is 2%. Everything is kept very stable. The cost of goods sold stay constant at 92.5%, with the remainder resulting in operating income. Under operating expenses, 2021 stands out a little bit. While it remains stable on the common side, we can see that the increase is due to asset impairment and restructuring costs. This likely was in part due to COVID-19, which affected global supply chains. Another point to look at is additional income and expenses for 2020. This was the only negative for this line item, and it was due to low returns on interest and high interest payments. In 2022, this flipped, and there was far more additional income and expenses. A final important note for the income statement is that the tax rate changed in 2022, shifting to 16.6%, which will be used for the tax rate in the forecast. For the forecasted income statement, all the line items minus the income tax were held at the average for the past 3 years. As mentioned, this was because all the percents on the common sized over each line item had minimal variations and for the most part were all extremely stable. Going back to the earlier assumptions, I expect this stability to continue into the next 3 years as well. The income tax was held at the percent of 2022 because ADM experienced a change in their tax rate. This brings the income for the next 3 years to 2.4 billion, 1.9 billion, and 2 billion respectively. Similarly to ADM, Bunge's income statement is very consistent. Again, line items do not vary more than 2% over the 3-year period. However, there are a few items to note. One is the additional income and expense items. Bunge experienced some volatility in their sales and unrealized losses during this period. Because these variations are seen in 2020 and 2021, it is likely that it was also a product of the pandemic. Under the forecast for Bunge, I again use the averages of all the line items for the next 3 years as a percent of sales revenue because of the stability seen on the income statement. Unlike ADM, Bunge's tax obligation did not change, so this is also consistent over the next 3 years. Because of this, the expected revenues for the next 3 years are 2 billion, 1.5 billion, and 1.6 billion. ADM's historical balance sheet is similar to its income statement in that it remains quite stable throughout the years. Despite impacts caused by the Russian-Ukraine war due to sanctions in Russia and property damage and loss inventory in Ukraine, ADM has been able to maintain its assets and even increase them during the years since the conflict has started. Looking at the common sized, PP&E has dropped slightly, but receivables and inventory have been increasing to offset this. As for liabilities, long-term liabilities have not fluctuated much in the last 4 years, but there have been noticeable fluctuations in the short-term liabilities. Most noticeable are the accounts payable, followed by short-term debt. ADM has also been retaining a fair amount of earnings year after year, even after paying out its annual dividends. The projection follows a similar trend with little variation. Rather than increasing, however, they are following the projected revenues and moving in a downward fashion. There's little movement in segmented cash due to holding futures, despite commodity prices decreasing in the last year. Holding to the assumption, I do not believe that there will be much variation between years. This brings the projected assets to 59 billion, 57 billion, and 58.5 billion in the next 3 years. The liability side is like the other sections of the balance sheet. Larger movements occurred in the payables category as seen on the historical sheet, while other line items stay more gradual. Current maturities reverted to levels seen in 2020 because it is unknown when certain portions of debt will mature, and I have set long-term debts in the next 3 years to increase for this reason. As far as equity goes, all items have been held constant minus retained earnings. The dividends from 2022 was carried over for the next 3 years and subtracted from net income to calculate retained earnings. This brings the liabilities and equity section to equal assets and balance out the sheet. Bunge's balance sheet has a bit more fluctuation in it than ADM's. The first 3 items move steadily as a percent of total revenue, but this is not true for assets held for sale and other current assets. As noted in the 10K, a decrease in short-term investments in Ukraine occurred due to the uncertainty with the war and assets held for sale as Bunge completed a large sale for a wheat mill in Mexico. On the long-term assets, all assets other than PP&E remain as a constant percent of total revenue on the common sized. This is due to an increase in the revenue, but very little changes in PP&E. This will be modified slightly in the projection for the assets. The liability side also fluctuates considerably more than ADM's. The two big line items that stand out here are other current liabilities and short-term debt. The current liabilities are difficult to pinpoint because during 2020 and 2021, Bunge changed how it classified its liabilities on the balance sheet. Given the year in which this spike occurred, it likely was due to the pandemic. Similarly, short-term debt also spikes during this period. Again, this was during the pandemic and when interest rates were near zero. It's likely the short-term debt was taken out because it was cheap at the time and there was large uncertainty. For equity, we see that retained earnings have been increasing year after year. The projection for the asset side of Bunge's balance sheet makes much more subtle adjustments, despite the few fluctuations seen in 2020 and 2021 on several line items. The assumptions made for the forecast would expect to see line items level out and be more stable. For this reason, the average of the common size are used to get as close to stabilizing the trend as possible. This brings the total projected assets for Bunge to 26 billion, 23.8 billion, and 25.3 billion. Like the assets, liabilities are also going to have far less fluctuations, like the ones seen on the historical sheet. As mentioned, the largest changes were during the COVID years, and I project that this will not occur at the same extent in the future. For this reason, the averages on the line items were used to get close to the final numbers seen in the next 3 years. Equities remained constant, as like with ADM, and retained earnings were the difference of dividends from net income added back to the previous year's retained earnings. This brings the sheet to a balance, and that takes us to the last sheet, the statement of cash flows. ADM's historical net cash flows have been consistent over the past 3 years. However, each section does have some noticeable variation. In operating activities, accounts receivable and liabilities have noticeable swings. Both payables accounts rose considerably, and the decrease in receivables made for a high inflow in 2021 and 2022. For investing activities, there's an outflow seen in investments and capital expenditures, suggesting that ADM was expanding its operations to some extent. Finally, in financing, in addition to the repurchase of shares, ADM also decreased its net borrowing. After accounting for restricted cash, total cash flows have been increasing at a constant rate. The cash flows for the projection are taken from the assumptions used in the balance sheet simply because the cash flows represent the year-over-year change in line items. Liabilities is notable for this shift from an inflow to outflow. This is due to the decrease seen in the payables because of less projected sales revenue. Investing activities begin to see smaller numbers in 24 and 25 as well because the 2 years are quite close in sales revenue. Financing begins to see more inflows due to more borrowing and holding dividends constant rather than increasing them. After accounting for restricted cash, the ending cash for the years is 9.5 billion, 9.2 billion, and 9.3 billion. Moving to Bunge, they have kept their cash flows moving mostly in the same direction year after year, except for liabilities in 2021 and net borrowing in 2020, which were both mentioned in the balance sheet as likely due to the pandemic. A notable difference between ADM and Bunge is that while they both have been able to maintain growth in their net cash flows, Bunge is much more constant with its restricted cash. Like ADM, the projected cash flows are a product of the assumptions made on the balance sheet, except for other operating activities and other investing activities. Both have a factor that is not accounted for on the balance sheet, that being beneficial interest in securitized trade receivables and payments from interest in securitized trade receivables, respectively. These figures vary over the past 3 years, so I used the average of 3 years for each line item as a starting point and made several adjustments for my projections in the near future. With all items accounted for, Bunge's projected cash flows for the next 3 years are 1.1 billion, 839 million, and 857 million. Both companies are large cap companies with impressive financial sheets. While ADM is larger in market cap than Bunge, it does not necessarily dictate that it'll be a better long position. Bunge has been around for nearly a century longer, but ADM has well surpassed it despite this. As the companies currently stand, while both being in strong positions, I believe that Bunge would be in the better position. This is mostly in part since they have much more consistent cash flows in comparison to ADM. Being able to manage cash effectively is essential to the longevity and health of a company. While both would be great additions to a portfolio, Bunge, in my opinion, slightly edges out ADM. And here are the references that were used for this forecast.